Welcome to SmithWeekly discussions, an occasional program for our members at SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Matt S., Luke A., Viet N., and Brent S. On the program today is a new guest. Mr. Bruce Lane has joined us. Bruce is the executive director of GTi Energy, a Wyoming-focused ISR uranium exploration company that is advancing the Lo Herma and Great Divide uranium projects in east central Wyoming. The company also has exploration grounds in the Henry Mountains region, Utah. The company is listed on the Australian Securities Exchange under the symbol GTR, as well as on the US OTC markets under the symbol GTRIF. Bruce, welcome to the podcast.
Hi, Andrew. It's good to be with you.
Well, Bruce, first time on the program and therefore new to a good portion of our audience. So why don't we start off here with you telling us about your background in the natural resource sector and then also experience in this uranium market.
Yeah, Andrew, I guess I started in the natural resource sector around, it's getting on for 20 years ago now. Prior to that, I'm originally from New Zealand and currently live in Australia, but spent 10 years in the UK and worked for multinational consumer goods companies. So my initial experience was more commercial across marketing and sales and those sort of things and finance. I did an MBA at London Business School in the UK and then started my next career, which is in the resources sector, predominantly around financing originally, around listing of companies and acquisitions and divestments of assets, and then managing resource companies about 20 years ago when I came to Perth to follow my wife. So that's the personal story. I've had an involvement with uranium in particular since prior to the Fukushima earthquake, tidal wave and accident. And so I had an involvement with a Korean asset through a company called Stonehenge Metals, which we recapitalized at around 1.5 cents. And then at the time I handed the reins over there, I think it was trading at around 20 cents. Unfortunately, very shortly thereafter, Fukushima occurred and it became hard to finance things in the nuclear business. But that period really gave me an insight into the possibilities with nuclear power at a much more visceral level than I would have had before. And I always thought that at some stage the industry would come back, and I think the climate change narrative has driven all of that. And so back in 2018, we thought, look, it's time to get back involved. Timing's difficult. I keep reading of people who've been in the trade in the uranium trade as a trader since 2007. I think that's, it's a long time in a market that's been quite difficult. And we started back in 2018 looking specifically at assets in the US. We've been involved in other jurisdictions, Korea, Australia in particular. We thought the US was an excellent place to start the process of building a uranium portfolio, given the climate change net zero narrative that we thought would drive nuclear power at a macro level. But also we understood that the industry was on its knees, that there was really no uranium mining going on in the US at all. And there certainly hadn't been any exploration and investment. So, we're very strongly convicted that that would change and that the US would kind of wake up and understand the importance of its nuclear power business and that it needed uranium at home and enrichment and conversion and all those things. And so it's been a few years with a few ups and downs, but this is my kind of latest involvement in uranium. And if you look at what's been happening in the last day or two, I think we're pretty happy we made that move.
2018 isn't a bad area to come into this. It's been a long road, but it's worked out along the way pretty well to keep us going this entire time. And there was just enough there every year for us that it was worth continuing to push this forward. And we're glad we've continued to be here and be involved and exposed. With respect to just how you look at the uranium market today, Bruce, maybe not around the broader commercial nuclear narrative, but specifically how you look at the market today in terms of uranium supply response and maybe some of the challenges that you're seeing that the sector now faces.
I guess the obvious and the most topical one is if we see the likes of, the world's largest uranium producer, Kazatomprom, which I think just overnight have revealed that they can't meet their production targets, and they've probably missed them by something in the order of 9 million pounds, and that next year they'll really struggle to get above where they are now, and certainly not to where they want to be, which is 100% of their subsurface use agreements. That's a fairly strong indicator that it's not easy to ramp these mines and these operations up. And we think that Cameco similarly, are obviously having challenges as well. I don't know the extent to what that means. And there's a call coming up with them on Feb 8th, I think it is, 7th or 8th, depending on what country you're in. Even at the top end of the chain, the biggest suppliers in the world between Cameco and Kazatomprom, they're struggling to get more pounds out of the ground. And they really do know what they're doing. They are currently mining. Then we've got other players, developers who have struggled either to get started or restarted on the timeframes they thought, or say, for instance, they're trying to develop a new step-out ISR. The likes of UR Energy, who have made public statements about it being a bit harder to move forward than they thought, shows you at the coalface, I guess, the people who are pulling pounds out of the ground currently, or in the very near term, aren't finding it easy to actually move those projects to where they want to be. So that's the evidence, I think, of the next bit that I'm going to talk about, and that is that obviously the industry itself globally, and particularly in places like the US, the people who were around and built a lot of these projects, and there are 7 permitted facilities around us within 100 miles in the Great Divide and in the Powder River Basin in Wyoming. The people who were around who built those operations and ran them aren't really there anymore. Some of them are probably in their later years in life, and they might be retired, semi-retired, or possibly even passed on in a lot of cases. Or they left the industry and went and did something else because the industry really didn't need them, didn't want them, because the industry wasn't doing any mining. And that, in reality, has been going on. A process has been going on for about 30 years, since the end of the 80s, when the megatons to megawatts weapons downblending program started, and when the US government withdrew its subsidies, and when the Kazakhs turned up with cheap uranium, and then when Fukushima occurred and you had the likes of the Japanese destocking their inventory, and even some US reactors over time like Diablo destocking their inventory. So we've had a lot of drivers in the industry that have made the industry look very, very unattractive, deeply unattractive, in respect of mining uranium. And so the people simply aren't there. And it's not that they can't be retrained, and it's not that the industry won't respond to improved prices. Certainly the prices, if the spot price is an indicator of where long-term contract price is going to be, those prices are at the incentive level for the domestic industry in the US, and that's why these operations are turning back on. But the supply response is going to be tricky. It's going to take time. And how long is a very difficult question to answer accurately. But suffice to say, I think there are a lot of people with a very deep understanding and who've done a lot of analysis in the industry and who've been in the industry for a long time are saying quite loudly that the supply response is going to be very, very challenging just to supply the existing reactor fleet demand, given that there's already a gap of around 50 million pounds between primary mine production and the annual requirement. Don't quote me on the exact number, but it's of that order. So if you put new reactor builds on top of that, another 30 million pounds, and you take the Kazatomprom announcement of 9 million pounds less than they thought they were going to do this year, and who knows next year, then you can see that the industry needs to pull, really, to meet the demand from the nuclear power sector, needs to pull a heck of a lot more pounds out of the ground, and it is just going to take longer than people would think. And a bit of detail in that answer, but I think the supply response is going to be slow.
Appreciate the comments there, and it's good to talk specifically about some of the issues in the sector and the supply response answer. And the reality is there is no good answer to the supply response, and that it's going to take years to accomplish some form and put the pieces together of an answer. And none of us know what that looks like, but we do know that it's going to be very difficult to get there, and a lot of checks are going to have to be written from people outside the industry and people in the industry to finally get some of those answers going through the pipeline, if you will, Bruce. So I appreciate the comments there. Why don't we move into a quick overview of GTi Energy? Of course, is a subject of this program. For now, why don't we just have a quick overview of the company, and then from there, let's get into some specifics in a moment.
The history of the company, it's been listed on the ASX since about 2007. It was involved in gold exploration in Western Australia, and in fact, we in the early part of my involvement, we were actually running gold exploration as well as uranium exploration on projects we acquired in Utah, and that's when I became involved with the company at that time. We subsequently divested the gold projects into a spin out into a company called Regenerate Resources. R8R is the code on the ASX. And so the company holds around 5 million shares of that company, which have been under an escrow until the middle part of this year. So that's a financial asset of the company now. What we do with that at this point is not entirely clear, but suffice to say there will be options around that. The reason we did that was there are a lot of gold companies around and a lot of pure play gold companies, and really our investors wanted us to focus on uranium. That's where they felt the opportunity was going to be in the future, and we certainly strongly agreed with them. We really had to take a process, though, over time so that the ASX didn't force us to recomply with the listing rules, and that's sort of where we found ourselves, is starting with some assets in Utah. But we were always looking for ISR projects, and we were very interested in Wyoming, and through a number of factors we were able to identify some land packages in Wyoming that we thought, in the Great Divide Basin particularly, showed some very good promise for the future. And that's where those projects at both the Great Divide projects and Green Mountain, which are all essentially in the Great Divide Basin, how we came to own those was through some connections. Obviously, being in the States and working in the States and working with our geological consultants there, we were able to identify what we thought were the best bits of open ground that still remained in the Great Divide Basin. And this was back when nobody was exploring, and certainly nobody was talking about restarting plants. I think UR Energy were probably thinking about, wouldn't it be nice if uranium was not $20 or $30 a pound, but $50 or $60 a pound? And if it is, then they were sort of probably there to restart into full commercial production, and that's obviously what we've seen happen. But we also were looking to build our land package out. We conducted exploration and got some good success in the Great Divide, but we were always looking for new projects. And our Lo Herma project then appeared as an opportunity, and it was a combination of acquiring a very significant database that was produced in the 70s, drilled in the 70s, and some of it in the 80s. So we acquired the database and secured the land package by staking to pull that project together in the Powder River Basin, just about 10 miles or so. We are 10 miles to the west of Smith Island, Cameco Smith Island Ranch. So that's how we sort of gained the property portfolio, through acquisition, of property, through staking, and through acquisition of data. And the exploration to date has, I think when we started 2023, we didn't have any resources quoted, but we now, through the course of 2023, we've got 7.4, close to 7.4 million pounds of resource defined and published under the JORC rules, and we have an exploration target in addition across the portfolio of an extra, I think, 15 to 20 million pounds. So we think, there's good line of sight to a very significant potential asset portfolio there. But the focus at the moment is our Lo Herma project. That's our main focus, given our capabilities in terms of resources, in terms of people and money and time and all those things. we think the best investment the company can make is to grow and move forward that Lo Herma project. And so that's what we're doing.
On the capital structure, why don't we just cover off here before we get back into some of the projects and plans? Tell us where we are with the shares outstanding at the company at this point, the cash on hand, if there is a need to conduct an equity financing in the coming months, and also the major shareholders at this point on the roster.
Yeah, we've got just north of 2 billion shares on issue. At the end of the most recent quarter, which was the 31st of December, we disclosed a little over $2 million Australian in cash. The company's got an ATM in the market. It's for, I think, a total of 97 million and change, 97 million shares. And so that's a potential source of financing as we move forward. If there's price and volume in the market, then that can deliver some funding to us. Though we're obviously very mindful of being pragmatic and sensible about how that's used. We are in the process of refining our exploration plans as we go forward. Matt Hartman, who's our president of US operations, just joined us during the last month. And whilst he spent a bit of time consulting with us at the very back end of last year, he didn't join us formally until around the middle of January. And he's now onboarded and has his head around what we've done to date. And obviously he already knew quite a bit about the company before he started. But in terms of really understanding the geological setting, the models, how the resources are calculated, where the exploration potential is both along strike and at depth at the project, and planning that next exploration program, permitting, ground access, all that stuff. We're only really getting to that point now. So I think through the course of the next few weeks, we'll have a better handle on the exploration possibilities going forward, where we think we should put those holes, how many of them, what depth, all that stuff. And that will help us to really drive out what the forward budget looks like and help us to understand what our capital needs will be to achieve the outcomes that we think are possible. So to your answer about future financings, we're not desperately in the market for cash at this point. We don't have a raising open. We do have some bond money to come back. We may be able to liquidate an asset, or we'll find money elsewhere. But it is possible that we'll come to the market for a raise at some stage this year and maybe even this half. But there's no concrete plans. I think it's fairly obvious that there's a possibility of a raise coming. But and I would say this, and this is not financial advice, but I believe that our valuation doesn't accurately reflect the value of our assets at the moment. I think if you look back at the previous cycle, pounds in the ground were, worth multiple dollars in transactions and within companies. And at the moment, the market's probably giving us somewhere in the order of $1 or $2 a pound, depending on how you value exploration target pounds. And so we think it was probably more in the $5 or $6 a pound range back in the last cycle, and that was when the uranium price was $65. So we think there's value to arrive in our share price over time. It's not there at the moment, and so to raise money at these levels is obviously we'd prefer to do it at a higher price, is what I'm trying to say in a very roundabout way. Yeah, look, we've got some options listed out there. A class GTRO on the ASX, there's 400 odd million of those. They've got a strike price of 3 cents, and they expire in October this year. And then on top of that, there's some performance rights, most of which at this point remain unexercised in relation to the Branco Minerals acquisition, which was the acquisition of our Green Mountain project. And at this stage, I think some of those may have even expired or are likely to expire very soon, unexercised. So short answer is 2 billion shares and around 400 million options.
Bruce, thank you for that. On the other piece here, I think that's important is for you to discuss some of the folks over there at the company that are supporting you. Any folks there that you want to mention, key folks and their expertise area as to how they're supporting the company?
Yeah, Andrew, there's probably three that I think are worthy of mention at this point. I mean, obviously they all contribute, everybody on the board and within the organisation. So, but Jim Boffman, who's a director and does a bit of executive work for us, he's a Wyoming-based, or Denver and Wyoming-based geologist. He grew up in Wyoming. He's been involved for at least over 30 years. He's been a chief geologist, a chairman, a president, a CFO, and a COO in public and private companies. He was instrumental in the sale of High Plains Uranium to Uranium One back in 2006. And he was also involved with Cyclone Uranium and really, part of the founding group there. So Jim's been very instrumental in helping us identify projects and also introducing us to people in the industry. So he's a very valuable member of the team based over there, obviously in Denver and in Wyoming. Matt Hartman just joined us, as I said, touched on before. Matt is a geologist and has quite a deep commercial experience as well. He worked with SRK, but he's also worked with Uranium Resources, Strathmore Minerals in the past, most recently with Sweetwater Royalties, which is the largest private landholder in Wyoming. They've got some very significant trona assets, part of the checkerboard as well. And so Matt's role there was to work through their portfolio, identify some opportunities for growing the value of that land package and finding partners to work with it. So he spent a few years there, and obviously that's given him some additional, both broad scale exploration experience, but obviously a lot of commercial experience on top of what he already had. So Matt's quite fundamental. He's worked on ISR projects. He's worked on Smith Highland Ranch at Cameco's project. He's worked at Dewey Burdock on Laramide's, their Church Rock. He's got the sort of experience that really is perfect for us, having worked with us previously when he was with SRK when we first arrived in the States and were working on our Utah projects. Matt was really helped guide all our exploration activities there and helped us on the commercials as well. So the fact that he's agreed to come and join us is really encouraging for us. I think it's an endorsement of the projects, and also he's a great fit for us. We get on well, but his commercial and technical experience is hard to find in one person, let alone somebody who's got in situ recovery uranium experience on projects in Wyoming. We're delighted that he's part of the team, and we think it's going to make a big difference to us going forwards, just in terms of complementing what we've been doing with BRS engineering. Doug Beam at BRS has been helping us out for the last few years. And that's a very fundamental, important relationship for us. And once again, highly valued relationship from our point of view. Doug and his team there are based in Riverton in Wyoming and in Denver, and they really help provide the meat of our exploration capability on the ground. And that's been very successful to date in all aspects of moving the exploration projects forward, but also in terms of planning how we might look at commercialising these deposits from a development point of view going forward. And BRS have deep experience in the exploration side, the development side, and rehabilitation. So they're quite a unique organisation, having been involved in situ recovery in Wyoming for in excess of 40 years, probably over 45 years actually in Doug's case. So they're kind of I guess the key drivers, the locally based people. I think that sets us apart from others who are either just getting started or trying to get to the point of having a resource. So yeah, we're in good stead.
Good to always highlight some of the folks that you're associated with and who are helping advance things forward here at the company. But how about we get into Lo Herma for a moment? I know you covered a few things earlier, but maybe we can refresh you just a little bit and focus in on really what the next plan is for the project here. So, you gave us a flavor as to what the inventory of uranium is there now. Obviously, there's probably some confirmation work that needs to be done there to improve category confidence, as well as probably some test work being done at some point here on confirming ISR amenability. But go through what you see as the immediate next steps to progress the project, economic studies, when you expect to see some of those start to flow out here, and then what you see as the most meaningful pathway to development in terms of full-blown facilities, or if this is basically an operation that will be sent over to a processing facility to be handled.
Look, before I start this, obviously this is the part of the presentation where we can sort of wander off into forward-looking statements. And so, I qualify anything I say here with the kind of obvious fact that our resources at this point are inferred and exploration target numbers. So please just keep that in mind when I'm talking about the possibilities of what we believe could occur in the future if everything goes according to plan. So the current resource stated is 5.71 million pounds at an average grade of 630 ppm. What's notable about that is that grade we believe is a very a commercial grade, if you like. If you look at neighbouring projects in both the Great Divide and in the Powder River, that certainly would appear to be an economic viable grade, given that the project also has the right location below the water table, that the right widths and thicknesses are present so that we can get a grade thickness calculation of at least 0.2. So there are a number of other things that lead to the economic question, but at least we're starting with grade that we think could work if those other things come together. There's an exploration target there of an additional 5.8 million pounds up to 10 million pounds. So clearly, if we hit the top end of that, we're at around 15 million pounds. And if we hit the bottom end of that, we're at around 10 million pounds in that grade range. So we think that's a meaningful project. And I think everything I say should be couched against some understanding of what the scale means, because this is not NextGen's Arrow. This is a much different project for lots and lots of reasons. And I'll try and touch on those through the course of the call. But your specific questions were around, well, what do we do from here? And of course, as I said earlier, we are still in the process of synthesizing the drill information that we collected at the end of last year. We drilled 26 holes there. And the object of that program was two things. One was to confirm, validate the data that we used to generate this resource. We had 1,700 drill logs from historical drilling. They were paper logs. We had to scan those, digitize them, pull them into a database. Ground truth, the location of those holes, and we've gone through a process of trying to validate that material, that data, so that under the JORC rules we can hand on heart say, look, it's representative of what we believe is in the ground. And so that drill program that we conducted was partly for that reason. The other reason we did it was to test some of our exploration hypotheses around where the trends went within the Wasatch Formation, the upper part of the Wasatch Formation. And the historical drill holes are really down around that sort of 300 or 400 feet mark, say, around 100 meters. So we wanted to test what was below those drill holes, because there weren't many deeper holes at all. And we wanted to test the lower part of the Wasatch Formation, the trends along trend in the Wasatch Formation. But also there's a formation below us called the Fort Union Formation, which is productive in the basin, and Cameco has been producing from that formation in the past about 10 or so miles to our east. So we wanted to get a sense of whether or not we had mineralization within our footprint, within the project footprint along those vectors, because that's what really supports the exploration target. Although, our exploration target really doesn't include anything at depth. It's really based on the trends within the upper Wasatch at this point. And so the drilling program gave us some encouragement around all three of those exploration hypotheses, and it was designed to help us to plan this next phase of drilling, which is going to occur this year. So 26 holes is a fairly modest program. We thought at the end of last year, whilst I would have liked to have drilled more, we didn't think it was prudent given the way the market was still reacting. The broad market was very soft for equities in the junior sector, in the nano-cap space, which is where we are, and also the uranium market, although it had improved markedly, seemed to be sort of trading sideways a bit, and the explorers were really not in favour yet at that point. But we have seen that change dramatically in the early part of this year. So all that said, really, I think we're now confident that we can go and do what we wanted to do, which is to expand the drill program at Lo Herma and push on to try and bring as much of that exploration target as we can into inferred. And then, there may be a potential there to upgrade some of the inferred resource into indicated. But as you alluded to earlier, I think in your question, Andrew, there's a few things we have to do to upgrade the confidence of the resource, both as a resource that would be, amenable to open pit or underground or whatever form of mining, but also particularly for ISR. The distance below the water table, the thicknesses, the permeability, disequilibrium. We need to start collecting more data and delivering that in order to be able to move, say, closer to a PEA or beyond that. And so the PEA would be the next logical step for us. Part of the conversation we have about that is, well, how many pounds do we need before we start a PEA? And we've seen projects around the £6 or £7 million with PEAs. I think Azaga had one of the gas hills. We've seen Energy say that their intention is to move on and develop their Shirley Basin project. I don't think they've pushed the FID button and essentially said they are definitely going, but I think they're certainly heading in that direction. I won't speak for them, but that's my understanding. And that's an £8.8 million project, I think recoverable 6.4, or don't quote me on that number, but so as an ISR satellite project for their Lost Creek plant, which is 30 miles up the road, and they'll put in a bore field and an ion exchange plant and truck beads to Lost Creek, is my understanding, where they'll do the back end drying and drumming. That's my understanding from their public disclosures. Don't hold me to that, but I believe that's the process. So we know that projects that are around, if you get them to sort of £7 or £8 million, then they seem to be perfectly viable as a satellite, if all other things fall into place. I think they based their thinking around a price of around $70. I think their PEA, I don't know whether it says $65 or $70, but it's around that level. At $100, if that is the long-term contracting price or north, these things obviously, a smaller project can look economic. Having said that, look, our ambition is to drive the exploration to deliver a larger number of pounds in the ground. This next exploration program will obviously once again tell us more, and it may open up the possibility of more pounds at a deeper level. And that's not baked into our numbers here. So get it as big as possible, as fast as possible, as cheap as possible is the answer to what we're doing next. Without wanting to be too glib about it, that is it in a nutshell. And collect enough data along the way so that when we want to wrap an economic story around it, we're actually able to do that. And I guess that captures our thinking at this point.
A lot of options here for you guys to go in on this. And of course, we're in a market that, we're very close to global projects are now in the money. And it's funny, everybody talked about how their projects throw off massive amounts of cash at $40 and $50 and $60. And now we are at $100, at least in the spot market. Of course, term is at sub 70 at the moment. While all that fluff was talked about back then over these years, that the actual action on the ground is a different telling story. I've also seen, there's some of these super projects that over a drink or two, the costs are negative. So, it's just a little bit of a joke there, but I guess if you attach the carbon credits, it very well could be. But, there's just a lot of pieces that go to this. And this is interesting because you guys have the ability at small scale. With that comes generally not a large capex. You're in a position where you guys are close by and could establish relationships with others to toll process essentially. It is interesting from that standpoint. And of course, in Wyoming, the permitting process, so long as you do some due diligence and studies in advance, pre-work or pre-permit, if you will, you can usually get that across and moving fairly quickly. So it'll be interesting to see how you guys determine is the best course on this. So with Lo Herma, obviously that's the core focus. I just want to give you an opportunity to talk about the Great Divide project, as well as, if you want, you guys do have a project in Utah. Any comments on those other projects that are basically deemed non-core at this point?
Yeah, look, I'll touch on those briefly, but I wanted to just wrap up and sort of add on to what you said there, Andrew, about the viability and the optionality and the costs. And I think there's a sense that these are small projects, and I guess if you're comparing them to a MacArthur or an Arrow, a Husab or Rossing, yeah, they are small, but don't forget that if you have £10 million and let's use $100 as a uranium price, they're worth it's still $1 billion in ground. If your capex is use $100 million, but it could be lower than that. And I think if we see you get the numbers for the PEA for Shirley Basin are out there, and the numbers for Peninsula's uh, Lance processing back end, the elution, precip, drying, drumming circuit are out there, and you put those two together, that's around $50 million. So call it 60 for round numbers, and then you've got your ballfield development costs. So if your all-in sustaining cost is in the region of sort of $30 or $40, and some of them are higher, some call it 50 if you want to use round numbers. These things are pretty attractive projects, at what looks like modest numbers compared to Kazatomprom, but they are definitely worth having, which is why the guys who own these assets, the companies that own these assets, are switching them back on. Our asset is very relevant in that context. And if you're UEC and you're going to switch on Willow Creek in August, as they say they are, and sell their product into the spot market, then the more pounds you can line up for your plant, the better, one way or another. And drilling these things out and getting them through the PEA and getting them through some sort of final investment decision, it does take a while. And anybody who's got a few years head start in that process is going to look attractive as a partner or an acquisition target or what have you. And in the meantime, all we do is we keep focus on our core job, which is trying to expand the size of the resource, wrap economic numbers around it, and move it in the direction of development. And if one of those things comes along in the meantime, somebody wants to partner with us, buy the asset, it could be the Japanese, it could be the Koreans, it could be Exxon, it could be who knows. We don't know. It's all, obviously speculation. It doesn't change what we do in the meantime. And we just know that we're doing it in an environment where those things are starting to become real. So anyway, I just wanted to wrap it all up and say, well, it's a small project compared to these other ones. Why would it be interesting? And I think you spoke about the timeframes. The timeframes are different here. Next gen's going to take a long time to get Arrow into production. I don't know what that timeframe really is. I don't think anyone really does. These things are comparatively fast and easy, particularly if you're working with somebody who already has a permit and already has production licenses, that sort of thing in the region. So our other projects, there's two in the Great Divide Basin area. One is we call the Green Mountain Project, and the other one is the Great Divide Group. The Green Mountain Project is quite a large parcel of land comparatively. And we conducted some geophysics there, as we did on Lo Herma, to help us just understand. The radiometrics work quite well for mineralization that isn't too deep. We've got drill holes at Green Mountain as well, historical information. So we were able to marry the geophysics up with the drill holes and actually identify some significant trends on Green Mountain, which would indicate that there's some value in pursuing that opportunity in the future. And we wanted to do that geophysics, get the interpretation right, so that we could pinpoint our drilling more accurately. And so what we're in the process of doing is refining that drill program. We'll move forward with permitting that so that it's an option for exploration. If not this year, then next year. Look, if we deem that we should be spending all our money at Lo Herma and really focusing on that, then we'll likely prioritize that. If we're funded and resourced to pursue Green Mountain, we obviously would like to do that. We believe there's real potential there, and it also gives us an option for partnering on that project if anyone's interested going forward. So there are, really the whole idea here is to generate optionality around a project which we think deserves investment going forward, and we think it certainly does deserve investment. So watch this space in terms of what we do with it. The Great Divide Basin, we have resource there, 1.66 million pounds. There are opportunities to drill there. We've got permits in place there. We could drill there. We have, as I said earlier, chosen to focus on Lo Herma. We have permits, still have permits in place in Lo Herma, and we're going to extend that permit and look to drill, a larger program there. Great Divide, we could go in there and drill. At this point, we've determined we'd rather spend our money at Lo Herma. But it is interesting. Our Thor project, for instance, is only 15 miles away from the Lost Creek ISR plant. The mineralisation we think looks pretty similar to what's being processed through Lost Creek. We have an opportunity to make that project bigger through exploration, and that is certainly not out of the realms of possibility for activity. It's really just about of how much we can do in a given space of time with the money that we have and the people we have. So look, once again, very valuable to us, very interesting for us. There are expansion possibilities there which we're pursuing, but not our focus for this year unless some things change. And then we get to Utah. So we have a package of ground in Utah, a little over 3,000 acres. We did work on that, back in 2021, I think. We've got a pretty good idea of what the exploration possibilities are, particularly we've got one quite significantly contiguous piece of ground there at our sort of Jeffrey Section 36 project. And we have some internally generated exploration numbers there. We've put quite a few drill holes in it. We've got quite a few historical drill holes. The data was that work was done by SRK and by BRS. It's a good asset. We believe there are pounds there that could be brought into JORC without too much effort. We've got the Tickaboo mill that Anfield are working on, is right there on the doorstep, a couple of miles away. And we've got White Mesa, Energy Fuels. White Mesa is about 100 miles by road. Energy Fuels have said they're going to put out a buying schedule and go back to the old days when, the way that mill was supplied was certainly partly through district ore buying, and an ore buying station at Tickaboo. Used to be an ore buying station at Tickaboo, where the Shooterang mill is that Anfield are working on. So there's some real potential for that asset going forward. It's in the good spot where there's definitely work going on. How it gets commercialized in the future is a bit hard to say at the moment. We're happy to hold it. We may look for a partnering deal on it. It's unlikely that we will do any more primary exploration on it this year, but who knows going forward. We think it's an interesting asset in a spot where there's going to be a very, very high demand for uranium, especially when White Mesa gets switched back on at either 50% or 100% capacity. It's a big mill. There's lots of mines to feed it, and the mines all typically it's not easy to get a lot of uranium out of the ground through the underground mining in that area and the style of mineralization. So that's typically, we think it would need to be a kind of district-wide effort to feed that mill at full pelt. So that gives you a summary of all of the projects and, some understanding of why we're focusing on Lo Herma and some of the value that's in the company beyond that.
Yeah, that area down there in Utah is certainly interesting, and you don't have to look much further than Denison's operations down there in the past to get a rough context of what it takes to move a small quantity of pounds out of that particular region that you mentioned there. So I appreciate you covering that off. One of the other things here is just looking back at Wyoming again here. You have a number of peer companies out there, and then of course you have to look at competitive advantages between these peers. As you well know, there is, besides, of course, developer and producer class peers in Wyoming, you have a number of peer companies in the exploration segment, from Strathmore Plus, Nuclear Fuels, Premier American, and probably a few more to come, Bruce. But what do you think, in general to you, really sets GTI apart? Of course, it does have historical pounds here, or inferred pounds, but what do you think really sets GTI apart from, say, this pack that I mentioned?
Well, I think that's the one you've just spoken about is the obvious one. And I think, I guess you can call them historical pounds, but we'd like to think that they're more contemporary than just an historical resource, just simply by virtue of the amount of work we've done with the geophysics, the ground truthing, the drilling we've just done. We don't call them historical anymore. They're current JORC. So that's the key thing that sets us apart. Nobody else has got pounds in the ground. Certainly nothing, and certainly nothing that looks like it could be scaled as a developable ISR satellite or a CPP, central processing plant. So to the best of our knowledge, we are the only ones. Now, who else is out there and who else is doing exploration? Yeah, there's a few that have started and done a bit, but they haven't done much. We've been executing exploration in the US now for getting on for 4 years. And this is our third season in Wyoming. So we know we can execute. We know what to do. We've proven we can get it done. We've proven that when we stick the drill bit in the ground, we get results. We've managed to bring results onto our books. So I don't see anyone else that's done that yet. Now, nuclear fuels, obviously, they've got good backing. They're tied in with Encore. Bill Sheriff's very experienced, and a lot of people follow him. So, I can't speak to them, and I won't generally comment on what they're doing. But they are exploring 40 odd miles up the road from us in the Powder River at the KC project. And I don't want to advertise what they're doing, but they're actually out there hammering holes in the ground, and they've got Encore behind them. If they can put something up, if they can stand up £10 million on paper that's ISR amenable, then they've got a willing partner there for development in Encore. So that's their benefit, but that's also their detriment. I mean, we're free range. We're not aligned with Encore or USC or UR Energy or Energy Fuels or anybody at this point. We're backed by financial investors who want to maximize the value of that asset in the ground. And we believe that may appear, over the next 6, 12, 18, 20 months. So I think we stand out in the fact that we've made so much progress, that we've delivered a lot. We've had a very fruitful last 12 months. We also have a team there that can execute, and a partnership that can execute in Wyoming that's got the track record, not just with us, but with many other partners and clients and projects. So we do think we stand apart, and I think we also stand apart because we're undervalued. And once again, that's not financial advice. I'm not asking people to buy shares on that basis. I'm just saying that our perception of our valuation is that we're relative to others, we're undervalued, and that's the opportunity for investors. And we think the next 12 months you'll see some things from the company that will help to cement that value. And, we're very hopeful that the market will start to recognize that in a more meaningful way than it has over the last 12 or 18 months.
I do think that is a little bit of a set aside here, and obviously there are some various teams out there in the peer side, some proven and some purely unproven. And I do like the sense that you guys do have a project, and I apologize, duly noted that you guys do not have historic pounds there, and that you guys have started to improve the confidence level there. So no doubt in my mind is a good chunk of those pounds certainly there for you guys. And I think that's a piece that you guys should really take advantage of, is that you guys have that advantage. I would certainly focus that advantage on how those pounds create that value. And obviously, to me, I see path to production, I see path to cash flow as the priorities here, not necessarily the expiration comes in due course. For what that's worth, I do think that that's a good point out away from the pack there. As we go here, I want to get into local community in a moment, but before we do, one of the other aspects here that sometimes we like to ask is M&A strategy. Maybe the company has one, maybe it doesn't. But this question came from the audience. But if a situation existed to be taken over by a peer company or even a developer or producer in the region, Bruce, would that be something you would do? And specifically, this question from the audience wanted to know if Peninsula Energy specifically was of interest and if you have a relationship with them.
Look, do we have a relationship with Peninsula? We know Peninsula. I think Jim Boffman on our board has known Wayne highly for a number of years, and I've met Wayne. We're very supportive of what Peninsula are doing, and I have to disclose I'm also a shareholder in Peninsula. I think Peninsula's got its hands full with what it's doing. It's raised the money. They've got to get into production and prove that they can get the recoveries and the flow rates and all those things that Wayne understands so well. So I think, talking about Peninsula, it's a bit of a long bow. I don't think he'll be turning his mind to M&A and expansion outside of what he's got. He's got a big portfolio of ground that he can move forward with, and he has been doing that. He's had a project that isn't in some ways isn't dissimilar to Lo Herma, where he's had historical data and he's used that to stand up a resource, and he's got a possibility to move forward with that. But I hasten to say that I think his short-term focus is very much on getting his mill into production and supporting that cap raise that he's just done, which has been very successful. So We don't think about Peninsula in that way, if you like. Although you never say never about anything is probably the short answer. We'd always talk to Wayne if he wanted to talk to us, but I just don't think he will at this point. And I say that out of a huge amount of respect for what he's doing and a reasonable understanding of where he's at in the life cycle of the project. So, look, we do talk to our neighbours. I mean, it's a small industry. There's various reasons why it's a good idea to talk to our neighbours from an operational point of view around flora and fauna, sage grouse, those sorts of things. So, we're all aware of each other. I think, looking at all of the companies around us, if you look at them today, UEC getting back into production in August from their latest announcements, they'll obviously have a very strong focus on actually executing that and putting out some information to the marketplace that supports them doing that successfully. So I don't see them being overly focused on acquisitions at this point. That's as of today I'm talking about. Similarly with UR Energy, they're moving on with Shirley Basin. We're not aware that they're out there shopping for a conversation with us, around acquiring things. And part of that is, I think, where we are in the space now. If uranium price keeps getting stronger, if the Japanese come knocking and the Koreans come knocking and the French come knocking and who knows that, whoever else, Exxon comes knocking, then the world can change very, very quickly. So we would respond to that. But we think that where we're at from that point of view is, as you said, Andrew, we need to put the substance around these assets, and then strategic buyers will have their own strategic valuation for the assets. So if they have a £5.5 million processing plant like they do at Cameco, and they need £5.5 million output a year, they need, let's say, £8 million input from the bore field. They've got good assets around that plant, and some of them are probably ready to go for all we know. But another £10 million, 10 miles away, that's a year of operation for their plant. Would they deem it to be big enough for them to bother with? I don't know. You'd have to ask them. But that's where we see the value in the assets. But I don't think we're at that point where somebody will come and want to take us out. And if they did, I think it's too early for us personally. But it's never one answer. It depends who it is always the question. It depends how much they want to pay. But if you look at a path to production on assets, clearly somebody who's already got the plant and the permits and the licenses and the people should be able to accelerate the commercialisation of the asset, and therefore, from a time value of money point of view, an MPV point of view, the faster you can get that done, the better. Then, we would be silly not to think about that. So, very circuitous answer, nothing concrete in there, but we are very aware of the possibilities, and it's going to be, we'll deal with it on an opportunistic basis should it occur.
Bruce, I appreciate you entertaining the question there from one of the audience members. Once again, I think a lot of this is dictated on point in the cycle, and then of course price is always a big question mark as these things get evaluated. Aside from pro forma companies and pro forma concerns such as continued deployment and termination, change of control, et cetera, that always plays into these things. And as you know, given the sector has been very difficult times, basically post 2009, 2010 timeframe, that there's a number of folks also that are quite entrenched in their positions and don't move easily, if you will.
Yeah.
Certainly, I think you see that if you spend any time in the sector here. So I'd like to just get your thoughts here before we wrap up. Another important topic that has a growing importance out there everywhere, every jurisdiction, but cover for us the local community work that you are doing in Wyoming. Of course, we know that you're a small company and that can't really ramp up substantially, but nonetheless, it still happens. Just in terms of, local employment, utilization of local service providers, Bruce, and then any other areas you've targeted that you want to mention here.
Yeah, look, I think I'll couch my comments here against the backdrop of, the company, thinking about things from an ESG point of view. I mean, it depends which jurisdiction and who you're talking to as to whether the concept of ESG is positive, negative, or otherwise. And I think there's even a move afoot to change the terminology from ESG to something else. And I can't for the life of me, as we talk, remember what the other name for it is these days. But, it is vitally important that we do more than give lip service to the concept of having a social license to operate. At least with uranium and nuclear power, the general sentiment now has moved very much more to the positive than it was before, and I think that's borne out in numerous ways. I think the strongest indicator is that the political class have now see nuclear power as a net positive opportunity for them rather than just a net negative, which is the way it really had been viewed for, at least the last decade and a half up until maybe, the last year or so. So we think there's a support, and there particularly is in Wyoming. There's an understanding that mining's been going on there since the 70s. They know they're getting a new nuclear power plant down at Kemmerer by virtue of the Bill Gates, Warren Buffett, TerraPower, Rocky Mountain Power Coalition. So the social license side on that in that frame is I think it'll bring jobs to Wyoming, it'll bring income to Wyoming, it'll help to display the loss in the coal revenue. Wyoming's the second largest energy state in the US after Texas, so they've got oil and gas everywhere. So they want something that's going to, help pay for their kids' education for the next, 20, 30, 40, 50 years, the way that the fossil fuel industry has. And within that, we obviously have a very tightly regulated environment anyway with mining exploration, and particularly with uranium. It's self-sanctioned, self-administered in Wyoming. We don't go to the federal government for any permits around uranium, so that makes it easier. And generally the regime is supportive, certainly at the state level, very supportive. We don't have, First Nations people involved in our projects. They're all either on BLM land, which is open and has no land holding on it. So we really are just dealing with the BLM and the state. Or we have some parts of our projects, there's some ranchers involved. And so we have a relationship with the ranchers, and we work with them with respect to their conditions for access and activity on their land. But as I said, most ranchers in Wyoming have oil and gas, or not most, but certainly a significant number have oil and gas operations or some form of mining operations on their property. So I'll never say it's dead easy, but relatively speaking, it's a trodden path that we can walk without being too concerned. So from a social license point of view and from a community point of view, we obviously we're working with local people, where possible, local consultants, local drillers. We always try and use local content wherever we are. We operated through the entire period of COVID, where I couldn't even leave Western Australia. BRS executed everything on the ground for us. I mean, I couldn't even travel to the projects for the best part of 2 years. So we are a local company. The only thing we have in Australia is a shared services office, myself and an assistant who helps me with the accounts, and we have a CFO and what have you. So we're very light on in Australia in terms of activities and costs. It's really all there in Wyoming, and that's the way we see it going forward. Don't see any reason to change that. The other thing I should note is that we are Climate Active certified, which is the highest level of certification in Australia, and one of the highest and the most rigorous in the world, where we track our emissions and we report them and we mitigate them or offset them, and we use carbon credits to do that. So we are a climate neutral certified organisation, and we carry that on our website. It has cost us some time and some money, not a huge amount at this stage because we're relatively small and our emissions are relatively low, but we are very mindful that going forward in particular, that there's going to be an obligation on companies to report and have audited all things to do with their ESG and their emissions policies. So we are up to speed with that. So anybody who has that as a concern can be assured that we take it seriously without letting it kind of divert us from the focus of what we're trying to do.
Well, Bruce, I think we covered most of it off here. Any other closing comments before we go? And let me just tie that in with this last question to wrap up the program for today. For potential investors who are listening in, the company has a market capitalization of about 22 million Australian dollars. Why should GTi Energy be considered within the institutional, family office, and retail investors' portfolio?
That's a really good question. I think the companies that are in the nanocap space that are sort of sub the size that you would normally see in an ETF, for instance, or an institutional portfolio, we have to make a case for one, do we have liquidity in the shares? And I think that's one thing we can point to. We've got 3,500 to 4,000 depending on when you look at the register, but say 3,800 at the moment. We've got quite a large register. We've got quite a well-traded stock. We have had historically good volume through the stock, so there's good awareness of it. On the basis of a fundamental valuation, we talked about that earlier, using pounds in the ground and exploration target as some measure of the value of a company. If you look at peer transactions or peer valuations for companies, it isn't an exact science by any means, but when you're looking for a way to understand what value there is in the company and how the market's valuing it, and where it could be, we believe that you'll struggle to get Cameco to double in price. And I'm not saying that means don't buy Cameco, because if I've got a uranium portfolio, I want to have a portfolio of investment grade assets, and Cameco's probably got to be in there for most serious players, as do probably the ETFs, to give you that sort of balanced risk reward across a basket of companies. The Spot Physical Trust, for instance, there's a lot will have the likes of NextGen or Boss Energy in their portfolio. So all those things, I have those things in my portfolio, but I also have explorers, and some of those are quite high risk or higher risk in terms of actually getting their projects right through to commercialization. We don't believe we're at the exploration risk end, because we've got pounds in the ground, and we've touched on some very interesting opportunities for monetization of those projects going forward. And we think that the market will start to recognise that. So we think there's an arbitrage there between our current share price and what it can be in the next 6, 12, 18 months, 2 years. Particularly as we talk about what we're doing more with a broader audience. And I think we will do some things this year, and we've already, part of the reason for hiring Matt Hartman based in Denver is that he's more connected into the local market, and we can get out there and tell our story more easily than me having to burn lots of air miles and shoe leather and go and talk to people. So we will be for instance, at PDAC, and we will be talking to people more actively and promoting more actively to a North American audience over the course of the next 6, 12 months. And we believe that can make a difference as well. So, timing's everything. We think the market's in a spot where companies like ours will start to be recognised for the value that is there, and that is actually a core part of our investment proposition. As uranium price goes up and the market wakes up to the fact that the pounds are not there, and they won't be there anytime soon, they'll start to look at companies like ours and realise that we can actually play a part in meeting that supply crunch. It's not going to be this year or next year. It's probably going to be 3 or 4 years down the track at the very earliest, but it's not 10 years and it's not 15 years. That probably wraps it up. We think we've got the people to execute. We've got the track record. We're in the right spot in the biggest market for uranium in the world. The US is still the largest buyer of uranium with 50 million pounds a year. And look, they really aren't producing any at a time, or very modest amounts at a time, when their core supplier, Kazakhstan, not only cannot meet its current production requirements, but a lot of its future production is spoken for by Russia and China, and outside the JV agreements. So, we think that the US is the place to be because the customers need the uranium. We think Wyoming is a great place to be because that's where production is happening. Yes, there's some in Texas as well, but Wyoming, we believe, is where it is happening and where it's going to happen. And we think we're well positioned with projects that have, particularly Lo Herma, have a genuine possibility of moving forwards towards an economic outcome.
Bruce, thank you for that. And in respect to the US, it is a victim of its own ignorance. Well, why don't we wrap it up there? One last question for you. What is the best way for interested parties to reach out to the company, Bruce?
There's, I guess, a couple of ways. I mean, for anyone who's on the listen to the podcast and wants to talk to me, then they can just email me at bruce@gtienergy.au. If you go to the company's website, there's an email address which is info@gtienergy.au. That will get to me. But if you want to address me directly and make sure it doesn't go into the general pool, then it's bruce@gtienergy.au. And I really do welcome people reaching out and asking questions. I don't, I think it helps me stay in touch with what what people are thinking and asking, and it's one of the best parts of the job from my point of view. Assuming you don't want to give me abuse, of course.
Well, Bruce, thank you for that. Very kind of you to share that for the audience. Well, look, I really appreciate the time today. We went over quite a bit. Thanks again, and appreciate the introduction to the company. Keep up the progress, and we hope you'll come back again soon to update. Thank you.
Great. Thanks, Andrew. Thanks for having me on the podcast.